What's up, guys? We are on the first day of the aftermath of yesterday's, shit show. So, let's see how we do today.
With changes, GS set a industrial operating profit target for 2017 of $17.2 billion. You see the stock there.
Tesla is up, so we do have I saw Netflix was up too. We have a couple stocks that are up, but a lot of them are still down.
I tweeted out this morning.
Listen to this.
This CNBC.com article saying that you are against ETFs, and you cannot believe the responses I have gotten since. Tell us why you're against ETFs and what source of ETFs specifically.
Okay, thank you. Because my issue is I like the S&P 500. You want to do an ETF, you want to do Vanguard, which is what Warren Buffett suggested. I think that's terrific. But
we actually bought Vanguard, and I didn't even know that. I didn't know Warren Buffett suggested it. I just was doing research, and from what I read, that was the best one to get. So that's good.
You can somehow eliminate single stock risk in a sector. It's just an oxymoron. But somehow it's gained great credence. And I just feel like we've been brainwashed. Brainwashed by ETF people who really believe that somehow, if we lump the bad with the good, we do just fine. It's a mistake.
Yeah, I mean, you don't have to go too far for an example. If you take a look at it, for instance, I know you know this, Jim, the IBB, you got some of the biggest components there, Gilead, right? It's down 27% over the past 12 months, and Biogen is up 15% or so over the past 12 months. You own Biogen, you want to own Biogen, you buy the IBB, you're out of luck.
Exactly. We want growth from biotech, but Gilead is either value or value trap. Why would we want those all together? Why would we want the really great cybersecurity companies with the really bad cybersecurity companies?
So what?
I mean, that's a lot of these are either losing share or they just have some duds in them. That makes it so you think that somehow you're
see, like Apple's down.
You're not
that's not good.
Yes, if you're an ETF for gold, that may be a better way than owning individual gold stocks. But
so yeah, so the main argument is
single stock risk game. That is all about trying to get people to buy certain products that I think are really against their best issues, their best interests. And I got to tell you something, Melissa, that people are upset about this is just typical of how brainwashed people are. I mean, the idea, listen, I want the right to be able to buy the bad with the good. I mean, oh, wow. Okay, I'll fight for that right.
A lot of great points there, Jim. Thank you. And of course,
all right, so you heard him mention single stock risk, and if you watch CNBC in the morning, you're going to see a lot of commercials advertising ETFs, and they're saying you avoid single stock risk. So what is single stock risk? Well, it's pretty much as the name suggests. It's the risk of just having your money in one stock, because if that one stock goes down, that's a cool commercial for the Mercedes. Hold on, we're going to watch this one. So back to single stock risk. So we've talked about this before. One of the benefits of an ETF is it's diversified, right? Well, Jim Cramer's saying, well, if you diversify some good stocks with some really crappy stocks, I mean, what are you gaining? So luckily, the one that we got, Vanguard, is actually a good one because we looked at their top 10, and a lot of them were really good companies. So most of their money are in good companies, so that's not a bad one to get. But the biotech example he was talking about, you have the IBB ETF has a really crappy company in there that's been dragging it down. So he said, why would you want to buy that ETF when one of their big holdings is just losing a ton of money? And so the commercials will say, oh, well, ETFs eliminate single stock risk because you're not putting all your money in one company, which is a single stock. So by buying an ETF, you're diversified. So diversification can be good and can help you lose less money, but you do have to look at the ETF and see which individual companies they have, because if they have some really bad companies in them, you don't want to buy it. You'd be better off just buying single stocks. So that's what Jim Cramer's saying. He's saying a lot of people are brainwashed into thinking, oh, ETFs are always safer, but it actually depends on the ETF. So if you're going to look into ETFs, Warren Buffett suggests, I just learned from watching this that Warren Buffett, one of the best investors there is, he likes Vanguard, and luckily that's the one we got. So Vanguard would be a good one to get. Other than that, you just want to be, I mean, you want to check the stocks that they're holding, and if you see some bad ones in there, just don't get it. You can always just buy multiple different stocks. I mean, you don't have to put all your money in one stock anyways. So an ETF is really like if you really want some stability and you really want some safety, but you got to pick the right one. But other than that, you could always just buy like 5 different stocks, and then you're pretty much eliminating single stock risk anyways by buying 5 different individual stocks. So yeah, so I mean, like, again, ETFs are good. Vanguard, I think, is a good one. Other than that, it looks like, from what Jim Cramer is saying, you don't really need to invest in those. You can just buy multiple good stocks, and you'll see some good growth that way anyways, which is what we're doing. We only have that one ETF. Everything else we own are single stocks. And of course, we have a lot of options, which are much more risky, but I'm trying to get a higher return this year, so that's why I'm doing that. Otherwise, I would just do all stocks. Anyways, okay, so we're going to come back later in the afternoon because I really don't even want to look at the stocks right now. Like, I know I probably will, but I'm scared to see if we're going to lose more money, so I'm just going to kind of come back later on in the day, and we'll see how we do. All right, see you guys in a bit. All right, so apparently this Mercedes...
The Mercedes-Benz of tomorrow will transform not just the
I think I have seen this commercial
but
before.
mobility itself. An autonomous thinking vehicle protecting those inside.
But yeah, that's an autonomous car. It drives itself. There's actually no driver's seat in this one.
Help us get there.
It's just like a big cabin in the middle, and it just drives itself.
Innovations, no
Apparently they were just talking about it. They're not actually releasing it yet. That car, they've like unveiled that car literally years ago, like at least 5 years ago, and they still haven't released it to market yet. So I really don't know what they're doing. So yeah, Tesla's way better anyways. All right, so they're talking about what happened yesterday. So the term sell-off obviously means everyone was just selling off their stocks. That's a term you never want to hear ever in investing. Not good unless you own put options. In that case, a day like yesterday, you would have made bank, but most people don't own those. So yesterday kind of sucked.
Agree that tech has been leveraged to hopes of tax reform or at least repatriation.
I think in some cases,
All right, I'll be honest. I don't exactly quite know how repatriation works. I gotta look that up. It's a pretty. They've been talking about that a lot. But it looks like Apple's up right now, so that's good. Ooh, check that out. So we don't own Google. We do need to get in there soon. But Netflix, Apple, and Facebook are currently up right now. That's awesome.
We're buying a huge number of planes because we have huge demand, and it's Amazon. And I think that Amazon is the winner in every one of these situations. Amazon, by the way, winner in border tax too.
Yeah.
Border tax. Oh yeah. Because Amazon doesn't really have much borders. They just ship everywhere. I'm pretty sure that's what he meant by that. Yeah, it looks like some of the stocks are back up. So I did log into my account. A lot of the options haven't moved yet, but check it out. We are up right now. So the Apple calls are both up. Facebook and AMD calls are up. We just need Tesla, and we need, like, hopefully Netflix goes. Well, Netflix is up $4, so we need Tesla to go up, and we need Amazon to go up, even though it's down right now. But we do need these stocks to move higher, because we lost a ton of money yesterday. So hopefully those go higher. We'll check back in a bit and see how they do. All right, what's up? We're back. The market's been closed for about an hour. Good news is we made money. So one of the things that happens when you have a really crappy day like yesterday, a lot of investors see that as an opportunity to kind of jump on some stocks and pick them up for a cheaper price than what they were the day before. So usually after a bad day, you will see some stocks coming back up. Sometimes it might take a couple days before they come back up, but today, in our case, a lot of the stocks that we own did well. So we ended up making money today. So that's really good because I was really worried about yesterday, like trickling into today and losing more money. So let's see how we did here. So we made a little over 600 bucks. So that's really good. I'll take that freaking every day of the week, man. Seriously. So we still lost money with Tesla, even though their stock went up. So let me scroll down here. You can see Tesla went up almost 2% today. So I was actually really expecting its option to go up, but it still went down. I'm not 100% sure why. Something has to do with something with volatility. I don't know. It's just, I'm not really 100% understanding yet. The thing that's really pissing me off is the Nintendo, because if you guys remember when I sold it, while I was in Montana. It was like at $25 ish a share, and like it's seriously gone up like $5 since then. And we owned 350 shares. We would have made close to $2,000 on that. So I'm really not happy about that. It just seems every time I sell something it goes up. It just sucks. I really hate that. That's my like biggest pet peeve ever in the stock market, is selling something and then having it go up. Yeah, so it sucks. But really happy that we bought some more calls yesterday, because we made the most money from that today. So that was a good investment. Hopefully I'll feel a lot better about Nintendo if this Apple continues to go up, because then I'll feel like I put my money in a better spot. And of course Vanguard has been, doing pretty well. Like they went up a little bit today, so that's good. That was the thing we bought as soon as we sold Nintendo. So yeah, I mean, let's look at the percentages real quick. So Apple, the call we bought yesterday did the best, 11%, so that was really cool. The Amberella call did not do well, and neither did these two. So hopefully, I'm really not sure about Amberella, to be honest. I'm not sure how long I'll hold this. I really have hardly any money invested in it though, so like it's not like I'm gonna break the bank with this one. But I don't know. I don't really know how I feel about them. But again, not a lot of money invested in them. The total value we are at, so we are back up in the 47s. So that feels a little bit better. I'm breathing a little bit better now, although I definitely need to get back above 50, because we were at 52 at one point, and yeah, we're far away from there now. So I really just need Tesla to have a good day along with these other ones, because that would be amazing and we would have a ridiculously good day. I'm still waiting for that day. I know Tesla is super volatile, so it's not going to happen very often, but these guys should still be going up, because these are all solid like performers. So yeah, what are you going to do? Snap was the best today, even though they're still below their IPO price. So if you got in at their IPO, you're still, well, technically their IPO was lower, but by the time we were able to get in, it was like 24. So it's still not up to that yet. Nvidia still climbing back up. Of course, they had a bad day yesterday like everyone else. But Micron is another chip manufacturer, which I don't know too much about, but they've been doing really well this year. Let me show you the little chart for this guy. If you look at their 1-year chart, look how solid they've been doing in the last year. Like, I never really even heard of this company until recently. But their 5-year shows a little different story. They peaked in like late 2014, and then 2015 was a horrible year. Then they bottomed out in 2016 and then started climbing back up again. So yeah, this looks like it could be still a good investment based on their last year. They could still be going up, but I just don't know much about what they're doing and what's going on with them. I haven't done any research on them, but they are $26 a share, pretty cheap. So it's not a bad option if you're looking into buying some cheaper stocks. So that about wraps it up. I mean, we made money today, so that's good. Hoping that this continues tomorrow. We can, dig ourselves out of that hole we fell in yesterday, because that sucked. So anyways, yeah, if you guys like this video, please hit that like button. We're not up a lot for the year. We're doing okay, but I really was hoping to be in the mid-50s by now. But I'm not going to be greedy. I got to be patient. We still have. This is the 3rd month of the year only, so we still got 9 more months left in 2017 to make something happen. And you never know. If we had a bad day like yesterday, we lost $4,000 yesterday, it's definitely possible that we can make $4,000 in a day. So I'm not really, I don't think it's going to take us forever to climb back up. All we need is one good day and we're right back in it. So I'm just going to be patient, just going to be optimistic, and just keep up with the news and see if there's any good opportunities. Oh, going back to the sell-off yesterday, in the future I do want to try to have a cushion of money left over on the side so that we can capitalize on the next time a sell-off happens, like a lot of people do that. The most famous recent example is Carl Icahn. He's like a billionaire investor. The day Trump won, like that night, stocks were like plummeting, and he literally was like at like some banquet or something, like celebrating that the president won. He literally left, went home, and bought a bunch of futures or something for the stock markets, and he ended up making a crap ton of money. I can't even imagine how much money he made. I think he probably made at least $10 million. That's my guess. That night, he probably made a crap ton of money. But I do want to have that cushion of money set aside for next time this does happen. I want to be able to buy a bunch of stocks and see if we can ride that wave back up. So yeah, but it might be a while before I can get enough money to put in there, so we'll see if that even does happen. But yeah, so thanks again for watching, and we will see you guys tomorrow. Hope you guys have a great night, and you guys take care.